Welcome to the deep dive. Today we're getting into the recent performance of Asian Paints, a really major player in the Indian market.
That's right.
You, our listener, shared the detailed transcript from their Q4 and full year FY 2025 earnings call that was held back on May 8th in Mumbai.
And we've got the key voices here. Mr. Amit Singhal, the MD and CEO, Mr. Jam Murugan, the CFO, and also Mr. Parag Rain from Finance.
Yep. So our mission today is to really unpack all this information, cut through some of that corporate speak and pull out the key insights. What's really going on with their performance, their strategies, and maybe what the future looks like.
Absolutely. So let's get straight into it.
Good.
I think the first thing that really jumps out from the transcript is just how challenging the environment was. They didn't really mince words about it being a tough time for the whole paint industry.
Right. What did the numbers actually show for Q4 and the full year?
Well, looking at Q4 for FY25, sales volume was up, but only slightly, about 1.8%. But, and this is key, the actual value of those sales, it dropped by 5.2%.
Ouch. And the full year?
Similar story, just slightly different numbers. Full year volume growth was a bit better at 2.5%, but the value degrowth actually worsened, down 5.7%.
So people were maybe buying slightly more, but paying less overall.
Yeah.
Or buying cheaper products.
It signals real pressure, yeah. Either on pricing or the mix of products sold or just overall weak demand pulling down value. It's pretty significant degrowth.
Was this hitting all parts of their business equally? Or were some areas feeling it more?
Definitely not equal. The decorative paints side of things, the paint for homes, that was hit harder by the weak demand.
Yeah.
But their industrial business, that's things like coatings for cars, protective paints, powder coatings, refinishes, that actually held up better.
Interesting. How much better?
Well, in Q4, the industrial volume grew 2.1% and value was down 4.1%. For the full year, volume up 2.8%, value down 4.6%. So still value decline, but less severe than decorative, and the volume picture was a bit stronger. Shows different economic sectors moving at different speeds, really.
And I remember reading something interesting in the transcript you shared about regional differences too. It wasn't the same picture everywhere in India.
That's a really important point. They specifically called out that the Tier 3 and Tier 4 cities, so smaller towns, more rural areas, they actually performed better than the big urban centers, the Tier 1 and Tier 2 cities.
Huh. Any thoughts on why that might be?
Well, it could be a few things. Maybe incomes held up better there, or perhaps spending patterns are just different, less discretionary maybe. It definitely flags where some of the near-term resilience might be.
Okay. So a tough couple of quarters, weaker demand overall, especially in decorative and urban areas. But they did try to frame this in a longer-term context, didn't they?
They did. They acknowledged the softness, absolutely. But they were quick to point out their 5-year CAGR, that's the compound annual growth rate.
Right, the average growth over 5 years.
Exactly. They stress that it's still strong, which kind of suggests they view this recent dip as maybe more cyclical, not a fundamental break in their long-term growth story. It's about the bigger picture for them.
Right. So given this challenging backdrop, what are they actually doing? What were the key strategic moves they talked about?
Okay, several big ones. First off, distribution. They've really pushed their reach. They mentioned hitting 1.69 lakh touch points. That's huge.
Wow. And where are they focusing that expansion?
Seems like they're doubling down on suburbs and smaller towns, which makes perfect sense given that's where they saw better performance, right? Wider net, capture demand wherever it pops up.
Makes sense. And it's not just about selling cans of paint off shelves anymore, is it? They talked a lot about services.
Oh, absolutely. Services are a big focus. Their franchise service, it used to be called Home Solutions, is now in over 600 cities and towns.
And the thinking there is?
It's about building relationships, CRM, customer relationship management, staying connected, understanding needs, building loyalty. It's a shift from just being a manufacturer to being more of a partner in home improvement.
Okay. Distribution, services.
Yeah.
What else? Did they mention the business-to-business side?
Yes, B2B. That showed strong momentum in Q4. They're targeting different groups here, smaller builders like housing societies, but also big corporates and even government projects. That's the B2G side.
Diversifying their customer base, then.
Exactly. Spreads the risk, gives them another engine if the retail side is slow.
Innovation also seemed like a recurring theme. They threw out some big numbers on new products and patents.
Yeah, really impressive numbers. Over 300 new products launched in the last 5 years, over 130 patents secured. And it's not just for show. They said innovation contributed about 14% to their Q4 revenue.
14%, that's significant. Any specific examples they highlight?
They mentioned SmartCare Infinia. It's a terrace waterproofing product. And get this, it comes with something like a 25-year warranty.
25 years, serious.
Yep. That's a pretty bold claim, speaks volumes about the tech they believe they have, shows R&D is really central to their strategy.
And this innovation push extends beyond just the final product, right? And they talked about manufacturing too, backward integration.
Precisely. Two big moves there. First, a white cement plant in Fujiya. That should be running by June 2025. It's actually their first step into making cement themselves.
Interesting. New territory for them.
And the second one is even bigger, potentially game-changing. It's a massive investment, over 3,000 crores, in a new emulsion plant. They described it as futuristic, environmentally friendly.
And very few players globally have this kind of tech, apparently.
That's what they said. Only maybe 4 or 5 companies worldwide. It's coming online in phases, starting early 2026, fully operational by early 2027.
And the goal with that plant?
Better margins, for one. By making a key ingredient themselves, they control costs better, but also better product quality, potentially new kinds of paints because they control the formulation right from the start. It's a big strategic bet.
It sounds like it. Okay, so improving the core product and how it's made. What about making the products more appealing, premiumization?
Yeah, they're doing a lot there. Packaging, for instance. They revamped it, adding regional touches. They even did special IPL-themed packs for their Ultima brand, tailored to different regions.
Clever, using local culture.
And using tech, too. QR codes on the packs that link to, cultural experiences, trying to engage the customer beyond just the paint.
And are they also highlighting what's in the premium paints?
Yes, what they called ingredient marketing. So talking up specific components like graphene in Ultima Protec for durability or Teflon in their Royal range. It helps justify the premium price by explaining the science behind the performance.
Makes sense. But they didn't forget the other end of the market, did they? The budget-conscious buyers.
No, definitely not. They mentioned a specific campaign for their Ace and Tractor Emulsion brands. Budget cam warranty might...
Which translates roughly to...
low budget, power in the warranty. So it directly targets people looking for value, affordable price, but with the reassurance of durability, backed by a warranty. Shows they're playing across the whole spectrum.
And underpinning a lot of this seems to be this Hargar strategy. What's that about?
Hargar, meaning every home. It's about emphasizing how common and trusted Asian paints is. They use the claim, every second house is today painted by Asian paints.
Is that verified, or more of a marketing claim?
It's likely a strong marketing claim based on their market share, but the point is perception. They even use real footage of homes in their ads with the tagline, Hardus Ragar Kuchiketa Hai, every second home has a story to tell. It's about building that emotional connection, trust through ubiquity and quality.
Okay, that covers a lot on the paint side. But a really significant shift seems to be their push beyond paint into overall home decor.
Huge shift. They're moving from just surface decor, paint, to space decor. So furniture, furnishings, kitchens, bathrooms, even flooring.
Why the move? What's the thinking?
Well, painting is episodic, right? You do it every few years. But home decor, furniture, furnishings, that's more continuous. They want to be part of that ongoing life cycle.
But how are they doing that?
Through their beautiful home stores, 67 of them now, across 53 cities, offering integrated solutions. They actually claim they're #1 now in integrated home decor, modular kitchens, and also lighting that's helped by their acquisition of White Teak.
Right, White Teak lighting. And they have partnerships, too.
Yeah, partnerships with Pure for Furnishings and high-profile designers like Sabyasachi and Sarita Honda. It really signals their ambition in the decor space.
They also launched something called Nilaya Anthology in Mumbai. That sounded quite grand.
It does. A huge space, 100,000 square feet, positioned as a design destination for global luxury, showcasing Indian and international design, art, culture. It includes their own Nilaya range of premium emulsions, too. It's clearly targeting the very high end of the market, architects, designers.
A very different play from selling tractor emulsion. But it sounds like this diversification isn't all smooth sailing. You mentioned challenges.
They were quite upfront about that, yeah. Kitchens and bath segment, flat or single-digit growth, and they actually posted losses there in Q4 and for the full year.
Any specific reasons?
Well, for white teak lighting, they hit a snag with new government standards, the BIS specifications affecting imports, mainly from China. They said it disrupted things significantly, even led to no billing for 4 or 5 months while they sorted it out. That caused degrowth there.
Ouch, that's a big hit.
Yeah. And Weatherseal, their doors and windows brand, also had muted growth. But despite these bumps, they seem committed. They see these categories as crucial for that overall integrated home decor vision.
Okay, let's shift focus outwards. What about their international business, AP Global?
It was a challenging year overall internationally, too. Q4 revenue was down 1.5% nominally. But interestingly, in constant currency terms, it was actually up 6%. So currency headwinds were a big factor.
And the full year international.
Flat for the full year at base level. They said the Middle East and Asia did relatively okay, but Africa really underperformed.
Why Africa specifically?
Currency devaluation was the main culprit mentioned. Hit both the top line and the bottom line, leading to a PBT profit before tax decline there.
Got it. And their other international exposure is through the industrial joint ventures with PPG, right? How did they do?
Right, two main JVs. First is PPGAP, that's auto refinishes, marine coatings. They saw about 3% growth in Q4, around 6% for the full year. The full year profit margin was decent at 14.6%, though Q4 was a bit lower.
Okay, reasonable. And the other one?
That's APPPG powder and protective coatings. Strong revenue growth in Q4, around 11%. But their profit margin was squeezed down to 8.3% from 10.7% the previous year's Q4. Still, strong top line for the full year.
So combined, the industrial JV still grew.
Yeah, combined value top line growth was around 6%, so more resilient than the decorative side, as we discussed earlier.
Okay, let's dive into the financials a bit more. You mentioned value degrowth earlier, but also deflation. How did that play out in their margins?
It's an interesting mix. They did see deflation in Q4 about 1 to 1.5%. They even passed on a tiny price decrease of 0.4%. This easing of input costs was definitely helpful.
So lower raw material costs.
Lower costs, plus their own efforts in sourcing and formulation efficiency. It actually pushed their standalone gross margin up significantly in Q4 to 44.9%. That's a peak level.
That sounds great, but
their PBDIT margin profit before depreciation, interest, and taxes, which measures core operational profitability, actually came down. It was 18.5% in Q4, still within their guidance range, but lower than last year's Q4 and also lower than the previous quarter.
So higher gross margin, but lower operating margin. Why would that happen? Higher operating expenses.
That's usually the implication, yes. Maybe higher advertising spends, distribution costs, administrative expenses eating into the gross profit gains.
And did this trend hold for the full year?
Pretty much. For FY25 standalone, revenue down 5.4%. Gross margin was good at 43%, but the PBDIT margin was 18.9%, down from the previous year.
And consolidated, including international and subsidiaries.
Similar story on the consolidated level. Q4 gross margin up year-on-year to 43.7%, but PBDIT margin down to 17.2%. That was flagged as a bit of a concern. For the full year consolidated, sales down 4.5%, gross margins down about 100 basis points to 42.3%, and PBDIT margin down year-on-year and sequentially to 17.8%.
So margin pressure at the operating level seems to be the main story, despite some relief on raw material costs.
That seems fair, yes. And there were also those one-off hits we should mention again.
Right, the impairments and divestment losses.
Exactly. The impairment in white teak that was Rs 77.8 crores consolidated. The loss on selling the Indonesia business Rs 83.7 crores. And another impairment in Sri Lanka, Causeway Paints, about Rs 21.5 crores. Plus some losses on derivatives. These definitely impacted the final net profit numbers.
Okay, so looking ahead now, fiscal 26, what was the general feeling? Cautiously optimistic.
That's the term they used, yes. Cautiously optimistic for Q1 FY26. They pointed to strong monsoon predictions as a positive sign, potentially boosting rural demand.
But caution comes from
geopolitical uncertainty remains a factor, they mentioned. So some hope, but awareness of risks.
And they're sticking with their dividend policy.
Yep. Consistent dividend payout, 60% for FY25. And they also made a point of highlighting their ESG efforts, environment, social, governance.
Like the training academy?
Exactly. The Beautiful Homes Color Academy. They trained over 8.45 lakh people in a year. Painters, plumbers, carpenters, that's a pretty significant social impact initiative.
Definitely. Okay, the Q&A with analysts often gives some extra flavor. Did anything interesting come out of that section of the transcript you shared?
Yeah, quite a few nuggets. For instance, someone asked about those long warranties, like the 25-year one. Does that add costs?
And the answer was,
They said no,
okay,
basically. It's neutral because their formulation innovations offset any potential increase in claims. They see it more as proof of quality, a competitive differentiator.
smart. And what about handling the increased competition everyone's talking about?
Their approach isn't about, as they put it, shouting from the rooftop. It's more about focusing on their value proposition. Keep innovating. They mention things like their chromacosm color system, AI tools for dealers, and relying on decades of brand trust.
Play the long game, basically.
Seems to be the idea. They also talked about discipline in their international and home decor businesses, aiming for top 1 or 2 positions in those markets or categories. If they can't see a path to that, they might reconsider.
That's quite a clear threshold.
Hmm.
Did they talk more about just how bad FY25 was for the industry?
They did. They called it one of the worst years for paint demand in maybe 2 decades, specifically negative growth in decorative paints. They put it down to the market slowdown and the increased competition hitting at the same time.
So how do they plan to defend their position in FY26?
Focus on value, leverage that huge network, 1.69 lakh points, keep expanding. They expect things to get better when overall demand picks up.
But they expect to spend more.
They acknowledge that, yes, more competition likely means more spending on marketing and promotions is needed. But they believe the savings from backward integration, better sorting, and cost controls will give them the firepower to spend without sacrificing their margin target. Deflation helps too, of course.
That 18–20% margin guidance, they seem committed to that.
Very much so. They reiterated that commitment for consolidated EBITDA.
What are they banking on for growth this year, FY26?
They mentioned a few potential drivers: government spending picking up, growth in mid to luxury housing, and that hoped for rural recovery thanks to the monsoon. But their actual target for themselves, for Asian paints, is still cautious. Single-digit value growth for FY26.
Okay, single-digit value growth. What about CapEx? Are they still spending big?
They've spent a good chunk of the Rs 9,000 crores they had planned. For FY26, they expect about Rs 700–800 crores outflow, similar the year after, mainly for that big VMVAE emulsion plant. The white cement spending should wrap up in FY26.
Got it. Any more insight on why gross margins improved so much when the market was tough?
They really put it down to 2 things: deflation in raw materials and their own efficiencies in sourcing and formulation. Less about price increases, more about cost management.
And market share. Did they gain or lose?
They were a bit cagey on that, understandably. Said they need to wait for all competitors' results to really see the full picture. Their focus, they stressed, is on sustainable growth, not chasing short-term share gains with crazy pricing.
Makes sense. What about reacting to competitors' moves? Will they match price cuts, for example?
They said they'll react, but the focus remains on the overall value proposition, brand, quality, service, innovation, not just price alone. Brand strength is key for them.
There was also a question about maybe losing mid-level managers in this competitive environment. How are they tackling that?
Yeah, interesting point. They talked about strengthening execution capabilities and distribution, service, people management using technology like Salesforce, and improving processes. Basically, making sure the strategy gets implemented effectively on the ground, even if there's some churn.
Innovation seems key. Are new products focused more on premium or economy?
Across the board, they said economy, premium, luxury, but maybe a bit more weight towards premium and luxury recently. It's about addressing consumer needs and gaps, not just hitting fixed price points. And interestingly, interior products make up about 65% of new product sales.
And that huge distribution network,
Yeah.
is there still room to grow it in India?
They think so, yes. Immense potential, they said. India's expanding rapidly, infrastructure growth, new suburbs, smaller towns developing. They even mention untapped potential like selling through cement dealers. They see potential beyond 2.5 lakh touch points eventually. It's not random. They use cluster analysis to target underserved areas.
Wow. Just how big is the organized paint market they're playing in?
They estimated the total decorative market, including waterproofing and putty, is around Rs 80,000 crores, and the organized players account for about 75–78% of that. So it's still a sizable unorganized segment too.
Okay. And that luxury Nilaya anthology place, what's the core rationale again?
Catering to the absolute top end. Wealthy homeowners, architects, designers looking for exclusive, bespoke, often international designs, all curated under one roof. A global luxury design destination was the phrase used.
Very ambitious. Did they say anything about where the competitive pressure is coming from, just the new big entrant?
Interestingly, they suggested it's not just the newest player. Pressure might also be coming from other existing players who are maybe reacting nervously to the new entrant. So, a complex dynamic.
What about down trading? People buying cheaper paint. Why is that happening?
They attributed it to a few things: changing consumption patterns, maybe a liquidity crunch for some households, and people simply postponing repainting jobs.
And within the industrial business, which parts are most profitable?
Auto and refinishes have the best margins, apparently. Powder and protective coatings are lower margin businesses.
They seem conscious about predicting a quick return to double-digit volume growth, don't they?
Yeah, quite cautious. Because home construction itself is still sluggish, they see more potential demand from infrastructure projects, maybe. So single-digit value growth feels more realistic to them for now.
Are they planning any price cuts,
Yeah.
given the deflation?
They're watching things closely: crude prices, the rupee dollar rate, potential tariffs. No immediate plans mentioned. They want to see how things stabilize first. They are aiming, though, to narrow the gap between volume and value growth, hopefully keeping it within 6% by managing the product mix.
It feels strange that the paint industry is sluggish when some macro indicators look okay. Did they comment on that disconnect?
They acknowledged it's a broader issue affecting the whole home improvement sector: cement, steel, bathware, also seeing muted growth. Housing is lagging, even if infrastructure is doing better. They believe in the cyclical recovery of housing, but it's taking time.
And the long-term potential for paint in India is still huge, right?
Absolutely. Per capita consumption is way lower than developed markets, so huge headroom for growth. Their focus is on increasing how often people paint, finding new uses. Also, the industrial paint market in India is less developed than in the West, so that's another growth avenue.
Okay, just to circle back on margins, the gross margin improvement was mostly cost-related, not price hikes.
Primarily COGS, yes. Raw material efficiencies and deflation were the main drivers, with only a small benefit from past price increases.
And volume, is tonnage still how they measure it? Is that comparable?
They confirmed tonnage is still relevant for them, but noted most competitors don't disclose volume numbers, so direct comparison is tricky.
And their philosophy on market share seems to be steady wins the race.
Pretty much. Sustainable growth through brand, value, relationships, not irrational price wars that kill margins.
Final couple points. The white cement plant, is that just a one-off or the start of a bigger cement play?
They called it the first foray. They'll watch how it performs before deciding on any further steps in cement. So dipping a toe in for now.
And that VAE emulsion tech, what's the big deal there?
It allows them to make highly differentiated, greener products across different price points, and critically, with significant cost savings, because currently that VAE component is imported. No other paint company, they claim, makes it end-to-end like they plan to. Big potential advantage. So if we sort of pull all that together from the transcript you provided, it really shows a company facing a tough market, no doubt about it, in FY25. But they're responding with a pretty complex strategy. Innovation is huge, expanding their reach constantly, that big diversification into home decor, and the major bets on backward integration like the VAE plant.
Yeah, and that commitment to long-term value, even if it means caution in the short term, really comes through. Protecting those margins seems key.
Absolutely. The emphasis on sustainability over just chasing volume seems central to how they're navigating this.
Which leads to a final thought, really. When you look at that futuristic emulsion tech and the big push into luxury home decor with things like Nalea Anthology, it makes you wonder, doesn't it? How might Asian paints actually redefine the whole paint category over the next few years? Is it going to be just about color on a wall anymore?
That's a great question. It feels like they're aiming for something much broader. This deep dive gives us a really good look at their playbook right now. What other questions does this raise for you, thinking about the future of the home and construction space in general?